Hey everybody, what's going on? It is James here with Crypto Common Sense. I wanted to shoot a new update video for you. I did one about 5 or 6 hours ago. I said that I thought that it was time to take some profits on some alts and that Bitcoin looked like it was headed down. But I wanted to do a new update because Bitcoin, of course, just dumped about 5% in 5 minutes, which is a pretty significant move. And I wanted to talk about that a little bit. Also wanted to talk about the alt situation. And I wanted to talk about some bigger picture stuff because you may not realize that this dump was much more important than what it probably looks like on a smaller time frame. So before I jump into the content, please do me a favor. If you haven't already, go and hit the thumbs up button on this video and subscribe to the channel. And of course, don't forget you can check the description for links where you can follow me on TradingView, Twitter, and also where you can join my free Facebook group. So, literally 2 minutes before the market dumped, somebody had commented on my last video saying they just didn't see how it could possibly go under 10 grand. And I told them that essentially the reason that it would go under 10 grand is because there were people who were holding with the expectation that it was going to go up, and as soon as they lost faith in that expectation, they would begin selling. And it was just lucky timing, whatever you want to call it. 2 minutes later, the market dumped. So let's take a look at this chart. We're going to look at a 4-hour chart first. This is a chart that I posted up in my Facebook group midday. All right, way back in here somewhere. We were basically inside of this symmetrical triangle, and this could have broken either way. This could have went up or it could have went down. This wasn't really to me, it didn't say bull or bear. It just said something big was coming. And it broke down, so we had this big breakdown. But if you measure this thing, if you actually measure the width of this triangle, and you measure it from way down here to way up here, that triangle is about $1,600. And the way these things work is you take this and you pull it over basically from the apex of that triangle, and that gives us a target down around, guess where? $8,500, right? $8,500, which is a long-term 50% Fibonacci level. It's not really a fib level, by the way. A friend of mine told me that a few months ago, and that blew my mind. I'd always called it a fib level because everybody else does. But yeah, if you actually look it up, it's not a fib level, but it is, for our purposes, part of our retracement level. So 50% retracement. Okay. Kind of a big deal. But there's something even bigger than that just happened, and I haven't seen anybody talking about it yet. So I'm going to talk about it real quick. If we take a look at the bigger chart, this is the BitMEX chart. And if you are a believer in the symmetrical triangle theory, right? Most people know by now that I think we're in a descending triangle going back to June. But if you believe in the symmetrical theory, this is kind of what your symmetrical triangle is going to look like. And if we connect this tail back here and these tails here and all these tails here, you can see that we actually just broke south of this trend line, right? Now we've come back up and we're testing it. Basically it's support flipped resistance. So this is going to be important to keep an eye on, because if this closes underneath this line, especially on a daily candle, that's going to be a very bearish sign indeed. Okay. So right now I'm watching that very, very closely to see how that plays out. But the other thing that I wanted to talk about in this video is I want to talk about something. Sometimes Twitter is the most amazing place because it will spark ideas for videos. So earlier I was actually having a conversation with a guy, and it really came down to, he believed that price action was pointing north, whereas I believed that price action was pointing south. And we were, having a conversation back and forth, not an argument, just a conversation. And he said that, you could go back and look at historical price action. You could see these things in the past and how they were bullish movements. So essentially I said, okay, well, for argument's sake, let's take a look at the past. And I started looking at the past, and it didn't support his theory. In fact, it supported the fact that this is a very bearish scenario that we're in right now. So I'm going to share this with you. All right. I don't think I've talked about this in the past. If I have, please forgive me. If you've seen it before, you can just skip this video. But essentially, if we take a look at a Bitstamp chart, right? And I like using Bitstamp because it's a chart that actually goes back far enough. Let's go all the way back to 2012. Essentially what we had was this parabolic climb. We had a bubble, it popped, we had a retracement, right? A bear market. And then there was a huge rally, a relief rally, or an echo bubble, if you will. and it created this descending triangle shape, and then it popped and it went down. Okay. Now, what we've noticed, and I say we've, there's been actual papers published on this or articles online published on this. Each of these market cycles in crypto, they last a little bit longer than the cycle before it. They tend to play out a little bit slower than the time before. So this was the first bubble that I'm going to talk about. This happened in 2013. This was actually early 2013. This isn't the bubble where it went to $1,000. This is the bubble where it went to $280, and then it popped, right? And this essentially lasted, the bear market lasted from early April, and it bottomed out literally a couple of weeks later. It had this relief rally, and this whole rally here was literally about a week. Okay, this is a daily chart. So this was about 1 week, and it put in this descending triangle, and then it dumped, right? And what it did was it didn't dump to a new low, right? It just came down and basically retested this breakout. Cool. Okay. So that is 2013, early 2013. I was saying 2012, but early 2013. Okay. If we go over to 2014, we actually had the same thing happen. So if we go to our 2014 bubble, right, we're going to change this to a weekly chart. And this bear market actually lasted from November of 2013. It bottomed out basically in early 2014. It looked like it was done. It looked like it had bottomed. Now we know in hindsight it actually took a year longer, but it looked like it had bottomed, and then it had this rally. And again, this rally, right? We had this U-shape or this cup shape, and then we had this rally, and we had this descending triangle. And when we had this time that descending triangle lasted from the middle of May all the way through August. So it actually lasted about 2.5 months roughly. Okay. And then it dumped out the bottom, and it went in and punched at a new low, right? It looked like the low was $343, but in fact, the low ended up becoming much, much lower. Not even this low, right? It actually ended up being way down here around $155. Okay. But people back here thought the bear market was over. They thought that, it was the new bull rally. And finally, we have the current market, which looks an awful lot like those other two markets. Had the big parabolic climb, had the cup, the big rally, and now the what I'm calling a descending triangle, right? Bam, bam. Okay. Not the cleanest lines in the world. We can draw some trend lines that look a little nicer, right? We'll stretch this out so it's not so mushed up. And we basically have something that looks something like that. Okay. So that is why it's one of the other reasons, right? Again, let's go back and look at these, right? Look at that. 2014 is a really good example, right? Bam, almost straight up, descending triangle, and then dump. Okay. So again, it could be that this is a bear market rally and that we are going to go down and fill in this little gap down around $1,300, like the early 2013 bubble, or it could be more like the 2014 run up, right, where the false rally happened. And in that case, all it did was come back down and retest this breakout. Okay. Excuse me. Had those reversed. The 2014 one made a new low, whereas the 2013 one just came down and retested the breakout. All right. That's what I'm expecting. I'm still expecting that. I didn't buy any Bitcoin to go long when it fell to $9,600 a few minutes ago or an hour ago. I did not go long on that. I thought about going long on a scalp, but I was like, you know what? I'm not even messing with it. I'm just patiently waiting. But this, I was actually going to do a video on this, and then the market started dumping, so I just waited until the market got done. Historically, this has happened, right? We did not have this happen yet in this particular bear market. We didn't have this happen. We didn't have one of these false rallies that dumped out. So maybe, this is our false rally. Now, some people are going to say, James, we had rallies all through the bear market. We did, but none of them put in a higher high, right? They were all lower high, lower low, lower high. Right? This one started putting in a triangle here. So we had this descending triangle, right? But there was never a higher high. There was never a false, basically a bull trap. See how this put in right here? See, you had a high, then a higher low, then a higher high. So this was a big bull trap right here. And if you go back to the one before that and you go to a daily chart, it was the same deal. Right? You came down, up, down, higher low, higher high, higher low, higher high, right? Big ass bull trap, and then dump, right? And again, this one didn't dump lower, right? It's not that it actually made a new low. If you scroll sideways, it never did go lower than this. It just basically came back down and tested the old resistance flipped support. Okay, so that's what I'm looking for, guys. I'm still looking for that, and this dump was very, very important because of how low it went, right? This dump, again, it broke out of, even if just temporarily, it broke out of this symmetrical triangle. That's kind of something that the bulls are clinging to. And that all ties back into what I was saying at the beginning of the video, which is, the person was saying, they just didn't see it going under 10,000. By the way, I'm not making fun of that person at all. It happened to be that they said that right before it dumped. They said they didn't see it going below 10,000. And like I told them, it's just a case of people haven't been shook out yet, right? There's still people who are clinging to hope. Once those people lose hope and start dumping, or once the market starts going down and they panic, they're going to capitulate, right? That's just the way markets work. Now, I can't guarantee that the price is going to go down. I'm just saying if the price goes down, people will capitulate. That's just the way it works, okay? If it goes up, they'll FOMO. They'll do the exact opposite. But right now, we need to watch this very carefully because, it's flirting with breaking completely out of the symmetrical triangle, and there just wouldn't be much left to cling to after that, right? For the bulls, at least. For the bears, this is looking better and better day by day. So keep an eye on that. And also don't forget that the actual breakout target of that triangle is actually way down $8,500. So this, the fact that it's kind of jumped a little bit, had this little bounce, very likely that's a dead cat bounce. Very, very likely. If we take a look at it on a 5-minute chart, we can see that essentially what we got was we got way down here to like 3 or 4. 4.83 is where this candle closed at on RSI, and this candle here actually closed. It says 9.25, but if we take RSI and we look at the low, that was actually 5.83 it got down to, right? So we had some dreadfully low RSI, and you're often going to get a bounce before you start, resuming your downtrend or your down move. I think it's very likely that this will end up being something like this, right? Basically a big old bear flag. But we'll see. Keep in mind that we have had these giant moves before, of course, like every market. And the last one we had was, back over here. And then it actually did grind sideways, sideways and up for about, a day and a half. And it actually went from being down around, 10.2 all the way back up to around 10.6, and then it continued its down move. So it could be that we do see this climb all the way back up to retest, even 10,000 possibly. It could just climb like this, back up to 10 grand, and then do a move like this. Or maybe this is just one big bear trap, right? Got to be open to all possibilities for sure. But I wanted to shoot this video, number one, because again, I wanted to share that as comparisons with the past market cycles. I also wanted to talk about this dump, and say, hey, look, I think we're going lower still. And I also want to tell you, be careful with the alts. I had mentioned taking profits. Hopefully people did take profits on that stuff. I know that I looked at OMG, it was up to $1.20. Then I looked a few minutes later, it was down to $1.12, or a few hours later. EOS went down from like 418 all the way down to like 390. XLM was up to like 10 cents at one point today, or close to 10 cents. Last I looked, it was down around 7.5 cents or 7.7 cents. Right, so we're talking huge drops, 10, 15% drops on a lot of those alts. But I'm going to leave you with one last thought, and I'm sorry to make this muddy, guys, but I'm going to leave you with this one last thought. This isn't guaranteed over, right? This doesn't guarantee that this was a false rally. That's the thing about markets that make them so damn tricky. I pull this in, and you look at my posts about this alt stuff. I literally said what I want to see as a retest of the neckline. That would be what I'm looking for to avoid a fake out. So it could be that that's what this was. I mean, look at this. This purple line is the neckline, right? So it came up, it pumped way up here to 83 billion, and then it dumped and it bounced. I mean, it just bounced perfectly right off that flipping neckline, right? The high right here was right around 74.4 billion. The low right here was right around 74.3 billion. That's exactly what I would want to see to go long. Not to be bearish, but to go long on alts, right? That's what I'd want to see. So mixed signals, which is par for the course with cryptocurrency, right? Where on one hand, Bitcoin looks like absolute dog shit, looks like it's finally getting ready to, dump like it should have done 2 or 3 months ago. On the other hand, alts are looking just really, really good. So just going to have to sit back and wait and see how this thing plays out, and use proper risk management, because again, if Bitcoin does finally go through that capitulation stage where it finally does dump out, chances are it's going to pull the altcoin down with it in terms of USD value. You may see a lot of altcoins still gaining in Bitcoin value. So if you're trading for Bitcoin, if you're trading for Satoshis, you still might be in great shape. I'm not trading for Satoshis right now. I'm trading for US dollars. I'll flip back to trading for sats once I feel like we're in an uptrend again. So there it is. All right. Obviously, remember, I am literally some guy sitting in a spare bedroom, not a financial advisor, not your financial advisor, and nothing in this video is financial advice or trade advice. You should always do your own due diligence and seek out professional investment advice before making any type of investment. Don't forget, if you haven't already, to go ahead and give this video a thumbs up and subscribe to the channel. And of course, you can check the description for links where you can follow me on TradingView, Twitter, and also where you can join my absolutely free Facebook group. This is James with Crypto Common Sense. Trade safe.